to myself, I'm a man of wealth and taste.
I'm the king of rock, there is none higher. Sucker MCs should call me sire. To burn my kingdom, you must choose fire. I won't stop rocking till I retire.
Now we rock the party and come correct. All cuts are on time and rhyme connect. Got the right to vote and will elect. And other rappers can't stand us, but give us respect. I wanna rock.
Riders on the storm. Riders on the storm. Into this house we're born. Into this world we're thrown. Like a dog without a bone, an actor out on loan. Riders on the storm.
And the music was good and the music was loud.
All right, ladies and gentlemen, boys and girls, let me get rid of that, grab this, and just go up and say. Oh, good. Oh, lovely. This is one of the reasons why I want to do this more more often. So what I was saying is hello. I think I posted this on Twitter also by accident, but again, we'll figure that out. The game plan, I think, is going to be this time frame for a bit. The problem, I'll just bluntly, right? So I would keep booking these things or having them ready to book and send off to Stats Edge Pro members, and then a kid would get sick. It just happened like all the time, super consistently. So the game plan is now I'm going to pick times that the wife are around and home from work, and we're going to start doing these once a week. And most of the time, it's going to be for Stats Edge Pro only members. So, you know, if you're a Stats Edge Pro member, you'll get a kind of a secret link and whatever. And then periodically do them live, because I kind of miss doing some live streaming on the channel here live. Last time I tried to do any of this, my platform kept just busting, so I found a new one for that. But I have, for everyone, I've got the Discord open, and it's on right now. So the game plan is to, part of Stats Edge Pro membership is you guys can ask me any question that you want about the product or the membership or any of this kind of stuff, and I go through as long as I have question. I think all the literature says monthly, because that was generally the game plan and what we were doing. I want to do it a little bit more frequently, but make them shorter. And again, I know I've said that a whole bunch and didn't actually end up doing it, but I have more of a plan now. So I'm just going to pick an hour once a week that the wife is home, because every time I tried to do it, a kid would get sick. So I would have to cancel or not send it to you guys or something like that. So we are going to answer some questions. So I have all of the chats open, from Discord to, I didn't get any emails. I didn't see any kind of one-on-one emails. But I sent an email yesterday saying, hey, if you, Marquez on Red. Just going through my emails here. So you could respond via email. You can DM me on Substack. You can message in the chat here for YouTube. You can message in the chat for Discord. You can, anywhere you can get a hold of me. We're just going to do live Q&As, and we stay here until we run out of questions. That's the game plan. So I'm going to pause. I have like a stream going as like a mini thing. That might mess things up, but there we go. So the idea is we are looking to just have, again, periodic, the Discord is always open. You can always ask me questions, and when I'm not always there staring at it, but when I see it, I'll certainly answer a question, and some other people in chat do a really good job of answering questions there as well. So that's all well and good. But I think there's this kind of one-on-one, more personal thing helps as well. So I will, once a week, be here just answering questions and just talking about new stuff that I'm doing. Like, you guys have been hearing me talk about Ami Broker a lot. If you listen to our podcast with me and Dave, I've been doing some episodes on that as well. Just trying to branch out. Real Test is amazing, and it does a lot of things amazingly, and there's some things it doesn't do. So yeah, I'm looking at new softwares to be able to do that. And then as we kind of grow, because Stats Edge has been growing, and I want to make sure that I'm delivering a great product to you guys. So I'm always working. This is what I do. So, all right. So I see some questions coming in, and we'll go. And again, I have all of the chats open over here, so you can just ask me wherever you think you can get a hold. So I'm not going to say any names. I'm just going to read the questions, and I think that'll be the best way to do it. Quick question. I've been observing a setup. Take a trade and the position goes against you and your stop gets hit, and then is it to consider a signal in the opposite direction? In other words, operate reverse. So basically, you're taking a trade and you're noticing that you just take the trade and it immediately goes the other way and stops you out. And you're like, man, well, I should just maybe take the opposite trade if the stop happens. And that's a good way of thinking, and it definitely warrants further testing. The problem you're going to come in with that is markets don't move most of the time, right? That's why we have mean reversion, we have pullback, we have a lot of setups that are looking for the noise kind of back and forth in the market, right? So our pullback setup, we're looking to buy things that pull back. Our mean reversion setup, we're trying to look for things that are down on a longer term time frame. And then we have the momentum. And you notice the momentum has the lowest win rate. Our momentum strategy has a sub 50-50 win rate, whereas in the long run, the mean reversion and the pullback setup have positive win rates. So they have 60 and I think 55 respectively. So it just goes to show that if you are kind of chasing price in both directions, you're going to be wrong more often than you're right. And that's on essentially every time frame that I've looked at. It doesn't mean they're bad setups. You know, the momentum setup is a great one, even though it is frustratingly wrong. Like it's wrong frustratingly often. It doesn't mean it's a bad setup. It just means that it happens. So what I would expect you would happen is if you take your trade and then it immediately goes and stops you out, and then you want to take a short there, it's probably going to come back, and you know, it's markets wiggle around. It's what they do. So what I would say is you just have to monitor it. That's why we journal trades, why we do things like that. And if you find that when it stops you out, it really goes in the other direction, start to record those and start to build your own mini back test. But in most cases, that's not the right answer, right? In most cases, it's one of those things where, again, markets just range. They range from positive to positive and back to negative. And you just kind of have to go, okay. Like, I don't know how many of these momentum strategies I've been stopped out in the last month or so. It's sucked, to be honest. But it's just part of it, right? It's just, we take trades, they get stopped out, and it sucks. It's just kind of the way it happens, right? All right, let's go. What's my general views on stop hunting? It's complete and utter bullshit for people who are victims, like permanent victims. I guess we should do definitions. Now, is it like you put out a stop at a certain place and they come get your stop? Like, absolutely not, right? The market does not care about us. It does not care about retail traders. We are a very small fish in a very big pond. It doesn't care about us or what we do in any respects at all. If this was something that was a practice, the best way to deal with any conspiracy theory is to think, how many people would have to know and what's their incentive to keep quiet, right? If you put it in the extremes, if I steal a cookie from a cookie jar and it's just me and my son that know it and I give him some of the cookie, we might be able to keep that secret for a period of time. If people could see where the stop losses were and intentionally ran markets to them, it's everybody who's ever been a market maker in the past, everybody who's currently a market maker, everyone who is a market maker in the future, and nothing is leaked. It's nonsense. Now, will markets maybe gravitate to areas that everybody could put a stop loss, like a high a day or a low a day or the last candle's high or low? Like, what I would say is that if you find yourself stop hunted, which means the stock comes to your stop and then bounces a lot, then it's not the boogeyman's out to get you. It's more of your stop placement kind of sucks, and which is great because that's information. You could start to use your stops. Like, for example, if you see a lot of our stops are wide on purpose, and I think all of the stops except maybe the pullback strategy are all based off like ATR. So they're all based off of how much a stock moves and just not some arbitrary price that's happening, right? So WGS, let's take a look here at a chart. So WGS, right? So and the reason I brought this up is I just bought this. Where am I? Come on. Right here. So WGS, right? So this has come through. I'll just bring this over here, right? So this is the day trading bot, WGS, 109 entry, 95.05 stop, right? So long this one, and the stop's all the way down here on the daily chart at like $95. Well, that's not like, we didn't pick that out for fun, right? That's all mathematically driven. So what an ATR stop is, I guess to explain, is just the ATR, the average true range of the individual stock. How much has a stock move? How much does a stock move on average? When we get triggered, we add a multiple of that to there. And generally speaking, it just means that, hey, if that gets hit, then it gets hit. That's just the nature of it. If you are, long story short, sorry, I ramble a lot. This is what, like live streaming, I had to pull it in. If you find your stop normally hunted or your stop normally hit, then it just means that your stop's in like an obvious place that everyone else's stop is in. And that's fine, because the amount of people who think that they put a stop loss out in the market and the market moves to their stop loss, but then they don't put two and two together, that they could make trillions of dollars if that's true, just by like, I'm going to short a bunch of it and then I'm going to put a stop loss out. And when it goes down to that price, I'll make a bunch of money, is baffling to me. So that's the main thing to look at is, okay, if I'm getting stopped out a lot. And the other thing is, I think there's a very human thing that happens here, that because that is an incredibly obnoxious, annoying thing to do, you will often get very angry when it happens. So you will remember the times that it happens more than you will remember the times that it doesn't happen. So if that makes sense, right? So say you had 10 trades recently that got stopped out, and 2 of them, it went to your price pretty much exactly and then bounced. You're going to remember those 2 because that's the most annoying. Those 2 suck. Whereas the other 8 that hit your stop loss and went a ways down, you just don't remember as much. So it's why data is just so important, so that you actually know, is this happening frequently? Now, if 7 of 10 times the thing came down to pretty much your stop loss and then bounced, well, that's information as well. It means maybe your stop's too tight. You just got to move it somewhere else. So everything is data, right? But yeah, I don't like the other one. I don't like the just stop out and go the other way. Test it is always going to be the answer to a lot of those things. Yeah, so a couple ones. I joined last week and I want to know the verbiage of second day play, ATR breakout, all that kind of stuff. Well, let's go here and take a look. So all of this exists over on statsedgetrading.com, right? And I have to do a better job, and that is a 2026 goal, right? I'm a quant, not a communicator. But I have to do a better job with this, where right here, there's a detailed video. So for this one, those are the day trading ones that you just quoted. So if you click on the video, it will actually, there's my fucking Mike Noss Inception. So like right here, there's trading strategies, just talk about the individual setups and what we're looking for. So I do an example of each one and talk a little bit about them in detail. You can see all of those. Oh, I got to record this because it mentions the spreadsheet that I had to get rid of. But you can see all those here. And then you can also see the detailed statistics, which I'm updating these this week to have the new date in it. And you can see second day long, second day short, ATR breakout, ATR. So these are just the names of the strategies, right? Because my whole premise on trading is that it's all about combining multiple strategies together. Right? If you look at any one of these strategies, right, they're all okay, but they have losing years and they have long stretches of periods of time that lose. So my whole synopsis is that, well, you want to just combine uncorrelated strategies. So that's why in the day trading bot, you'll see these 4 strategies come through. There's really 2, and they're flipped, and we're looking to add some as well. So just to quickly go through some of these, and I'll grab some examples here. And I'll go into grab into the day trading bot and just grab some random examples. So WGS that we're on. This one says ATR MR long. And I'll just bring this. Let me actually just duplicate this and just pop it over here. All right, so this is WGS long. Right, and it's the ATR MR. So you could go to the strategy and you could actually look to see, and this is part of the point of it, right? This is our ATR right here. So this is a strategy. I know it's going to be right roughly 55% of the time. about a 1-to-1 or so risk reward ratio. Again, our day trading, we're looking for small edges, repeat it very frequently. And then you could also go to the video if you want to do that as well. And you could just, again, watch this, and I'll just talk about, where is it here? Yeah, so this particular one. But long story short is it's ATR, MR generally just stands for mean reversion, right? So anywhere you see MR, we're just talking mean reversion. And this is just saying that this stock for a day trading basis is oversold. So we know that from kind of 109 where the entry was, there is a 55% chance it is higher by the end of the day than it is lower from this price. And that's why that's basically it. So we're just looking to take that trade. We're looking to get long around 109 and put our stop out, our protective stop, and then just hold it until the end of the day. Now, day trading is something I'm actually working a lot on. I want to do more in day trading when it comes to trading stocks in play, or like gapper stocks as well. And that's part of the move to AmniBroker. AmniBroker is never going to replace Realtest. Is going to be my main thing for swing trading and investing and all that, where most of my money is. AmniBroker allows me to do tests with 1 minute data, so I can go back 5 years or so and I can test different strategies. And I want to build strategies that have basic rules around them, and we'll just have to rely more on the Discord alert bot, which means, right, I need something, because TradingView's been kind of crapping itself recently. So that's why a reason to move to AmniBroker. So yeah, so when we say ATR, or we say do the MR, the mean reversion setup, that's this one right here. And you can see it on the chart, right? If you go to a 30-minute chart, this thing just got, kind of murdered yesterday, right? Just down from what it lose yesterday, 12% yesterday, and it's down another 20% today. So that triggers for long for us, and that's just part of that particular setup. And then the second day play is kind of just a pullback strategy of that. So what, QXO? I don't know if I have that one. I haven't checked my broker. I had to like quick walk the dog when we were between those. Yeah, so this one's a short here. And this is just looking at, because a lot of what we're doing with these strategies is we're looking at yesterday's action, and we're pinning today's decisions off of yesterday's action. Right? So yesterday, this thing got killed. So the second day play is what we're doing is we're looking for a bounce into yesterday's range, and then we're looking to short that one, right? So this one is 25.43. We're currently like 25.53, but the idea is that if we bounce into yesterday's range, we have a stop here at the high of the day, and we're essentially just looking for, on a 30-minute chart, a bounce and then a failure. So it's just like a trend continuation on the daily chart. So those are the two setups that we're running right now, and they're just, long and short reversed. And it's looking for mean reversion or extension. And in this case, it's like pullback or trend continuation. And then eventually we're going to do probably something that's momentum based, like an opening range breakout or something like that. And that will, I think, wrap up a lot of the day trading nicely. But just like the swing trading, we're taking these different concepts of trading and we're merging them together, and then we're trading throughout a lot of them. So your second question is about position sizing. The assumptions for, I can go in here, but the assumptions for the back test have to do with, number of positions total. What's that? Positions, yeah. So this assumes that you take, for all of them, it's the first 5 of every setup. So for the day trading, we have 4 setups. So if you're going to take 5 from each setup, and then if you want to go into margin, you just take more, and that will up your returns, but then also up your potential max drawdown and risk. So for the day trades, we're splitting everything into 20. So say you had a $200,000 account, you'd be taking $10,000 per position. If you had a $100,000 account, you'd be putting in $5,000 per position. For the swing trades, because we have 3 setups, you're taking and you're splitting your account into 15. So for the momentum, you're going to take the first 5 of the momentum, the first 5 of the pullback, and the first 5 of the mean reversion. If you want to look for more, again, if you want to do more, you can. So like say you had $100,000 account, you leverage that up to 400K, and you wanted to take on more trades, you would just, again, do, let's say $150,000 account for the swings, right? Each one you take $10,000 worth, and then if more came in, you end up liking them, you'd just continue to apply $10,000 per position. Some people are comfortable with that. Some people aren't. When you back test it, it's exactly what you would expect. You are exploiting something that we believe is an edge more frequently. So on gross or on max in the long run, you're going to make more money, but you're going to have more exposure. So you're taking on more risk. So your drawdowns are going to be deeper, but your returns are going to be higher. Right. So at the end of the day, it kind of all smooths out. And that's kind of mostly what I'll do is I take, the first 5 of all the setups that are interesting. And then if more come in, if I like the setups, then I'll just continue to add that same position size to those. The reason for a dollar position size as opposed to a risk-based position size is simply because we've tested both and they are roughly the same in back test over 25 years. And it's just way easier to do a dollar-based position size. So it's one of those things that if I tested both and a risk-based position size was infinitely better, then I would come up with some way to communicate that to you guys. However, it was roughly the same. So it just might as well just take whatever, the normal position size. But it also means because it was roughly the same, there's nothing wrong if you want to do a risk-based position size, which would just mean, you'd pick a 0.5% of your account or something small, and then you would go through and just do based off trigger and stop loss. The only one that really kind of falls apart with a risk-based position size was the mean reversion. So like our Cisco, all right, that we bought yesterday, which is just doing great, right? It's up 2.5%, which is great for something like Cisco. Because the stops are so wide, the amount of shares you take are so small, because when you're trading mean reversion, you just have to have a wide stop loss. There's no testing that I've done. Most mean reversion setups actually test better with no stops, but that becomes very dangerous. But you have to have wide stop losses for these. Our momentum setup, you notice we have a very tight stop because of the low win rate. The mean reversion, the pullback, we have very wide stops because we're dealing with a higher win rate. And again, that's by design. We want things as kind of as different as we can. So yeah, so split your account into 15 for the swings, split your account into 20 for the day trades, and then for the investments, it's the same, where you're splitting your account into 15. And right, we have 3 strategies, so 5 from each strategy. The rotation strategies, you're not waiting for a trigger, you're just investing if they meet the criteria. So I hope that helps. Again, if you need follow-ups, let me know. I see your questions there, Mike, but I just see one that might be more relevant to what we're talking about here. So can you share which criteria puts stock on the second day play watch list? Not the exact criteria, but essentially it's a wider than normal move, you could say. So QXO, this from open to close is a more bearish than normal move. So you're getting more of a sell-off than this stock is normally used to doing, and you're looking to short that the day before. And then the rest of it comes down to optimization and a lot of testing and a lot of watching the trades as they come through and optimization, things like that. But that's basically it, is that this was an unusual move for this stock that we're looking to take a trade off of. And then we are tweaking, right, things kind of as they go. But that's what we're looking to do there, is just this is an unusual move, so we're looking to short into that move. And again, we are looking for, if you look at these kind of statistics, right, right? This one's right 51% of the time with like a decently positive risk reward. This one's right 50.6% of the time with a decently positive risk reward. And then these two, the ATR ones, are right 53, 54% of the time with slightly better than 1-to-1, right? So these are all, they're very thin edges. This is why I want to add some more active day trading strategies, like again, opening range break of gappers or something like that, because there is, some edge there, I think. But it's all about, for me, day trading is all about lots of tiny little trades. And this is more or less how market makers or people like that trade, right? We're not taking like a huge bet on some crazy, what is it, X Air? I saw it today, right? We're not trying to take a massive bet on these. Now in the future, right? This is the kind of stuff that I'm looking to potentially add, right? Simple, like 15-minute opening range breakouts of these, but it's all about small edges exploited very frequently. And that's it, right? You're trying to turn over a small edge. And again, that's how market makers trade. So we're looking to buy things that are overextended and short things that are oversold, and just have normal mean reversion happen in the market. And then over the long run with day trading, the way I look at it is that if it makes any money at all, it just pads into my swing trading. And the reason I really got back deep into day trading is because of the tariff tantrum, right? That kind of reminded me that, hey, there's these periods of time where we're not going to be doing too much. And there's one option is just to take your empty capital and go to the beach. The other way of doing it is just to say, well, I have free capital. I should employ that somewhere. As long as it makes me a non-0% return, it's something I should do. Another question here. Thanks for hosting this. Wanted to confirm position size. So I talked about that a little bit. Your position sizes for swing trading are the same size, or was it based off the same size risk? Therefore, yeah. So this was, again, it's dollar amount. So for you that I know who does a little bit more back testing, I see in the next comment, I just assumed equal percentage of the portfolio. So you take the portfolio, you divide it by 15, and whatever that number is at the time, that's what we're putting into the position. So if you're compounding, if you're not wanting to compound, if you're wanting to withdraw, then the same thing would apply. You take whatever your portfolio of your account is, you divide it, and then you go from there. One of the benefits of those is just like risk-based position sizing. Your account is growing when things are going well, and you're applying more size and risk to it. And when your account's shrinking, you're doing the opposite. So, another question. I've used AmiBroker off and on for 10 years. Geez, man, I might be reaching out for you to some help. I've actually been trying to learn Real Test only because some aspects seem easier for testing. Real Test is so much easier for testing. As someone who's going from Real Test to AmiBroker, I feel like I've been playing like a video game more on like normal difficulty the whole existence, and then I've like cranked the difficulty meter to 11. It's taken me like 3 weeks just to get data in, and I'm only like semi-confident that the data's in there. So in other words, do you think you'll likely move to AmiBroker for all your testing eventually? Absolutely not. So it's going to be nerd talk, but that's fine. You subscribed to a quant and a systematic trader, so you have to put up with some nerd talk. Pros and cons with everything, of course. The massive pros of Real Test are scripting language far easier, like a billion times easier. Data, especially I buy my data from Norgate. It's because it has survivorship bias and like all kinds of stuff built in. Stupid easy. You download this little app, it just spits the data into Real Test for you. You don't even have to think about it. So data and ease of programming, amazing. And then for me, what's really awesome is the multiple strategy testing is very simple, right? You when you're going into Real Test, just inside the same script, you can just add strategy A, strategy B, strategy C, And what it does is it tests those as a portfolio. So instead of where AmniBroker, you have to kind of do some hack after the fact to put them together. No, it's assuming I have like $100,000 portfolio, let's say, $1 million, a trillion, whatever number you put in, obviously. And based off all of the different strategies, it's knowing that, okay, you took too much of this, so you ran out of money, and you took too much of this. And because it's simulating it all within a same account, it's allocating money to those strategies all the time. So how can I explain this better? Let's say you have one strategy that you're buying and you're holding for a long time. You're buying and you're holding for days or weeks or months. You're using like a moving average trailing stop. So I'm buying strategy A, buys stocks that are breaking out, and it's holding them until they break their 20-day moving average. And then strategy B, I'm like scalping mean reversion in and out every couple days. That two strategies, it becomes very hard to simulate a portfolio over time because your portfolio value is changing constantly, but the amount of cash the portfolio has on hands is not changing with it, because there is a world where you took all of your breakout strategies and you use up your entire portfolio and you have nothing left for your craziness. And that's okay. And there's times that you want to split them evenly, and there's times that maybe this strategy should have 40 or 50% of your attention, and this one should have the other 60% of your attention. There's all kinds of portfolio level thinking that you can do just by adding all of these strategies together. And Realtest is built from the ground up for that. AmniBroker you can do, but you have to bolt a lot of it in after the fact. So what's the downside? The massive downside to Realtest, which I really wish Marsden would figure out, but I understand it's like a hard problem, is daily only data. So basically, the way to answer this is, I think, pretty simple. If you are planning on never needing intraday data and you're only going to do what you see based off daily candles, you're not interested in doing, really hardcore day trading and things like that, go with Realtest. It's just far better in like every respect, I can think. Also, no real-time data, so you'll have to have a real-time data source in order to push that out. If you ever think you're going to need intraday data, and for me, I want to get more intricate, more hardcore with the day trading setups, and I want to start doing maybe some swing trading setups that work off like 30-minute candles instead of daily. Then you need to go to AmniBroker, unless Marsden kind of gets Realtest going. So I'm planning on using both. Basically, I'm never going to leave one or the other. That's more of a cost, but that's part of what I take your guys' money and put it into, is more of this kind of stuff. So my plan is both, but yeah, that's the way I look at the differences. Is that they each have their pros, they each obviously have their cons, and then what we're looking for is some middle ground between those, right? Where I like both, but if someone came to me and they said, no, I'm never going to be interested in using intraday data, daily candle close is perfectly fine, then I'd just say 1000% go with Realtest. It's just so much easier. So much, not even close, right? All right. Yeah, someone said, I downloaded the trial of AmniBroker and I feel the same. Yeah, I've been trying to, with Norgate, you download this little Norgate application, and like every 15 minutes in the background, it just pulls in the new data and shoves that into Realtest for me. And the scripting is so much easier for someone who's like a non-programmer. It's crazy. I have been battling IQ Feed and just trying to shove it into AmniBroker for 3 weeks, and I feel like I haven't gotten, there's like so much other stuff that I want to do that I've just been focused on this. I think I got it last night, but yeah, it's a different beast entirely. So Could you elaborate on what you're looking for when overextended or oversold? Well, I'm not looking for anything when it comes to overextended. Again, we are systems traders, so it's just what the system tells us is overbought, oversold. But the main thing is the very typical indicators that we all know and love, your RSIs and your Bollinger Bands and things like that, and looking for multiple of those readouts to show oversold, and knowing that we are right 60% of the time, right, in our mean reversion setup. So 4 out of every 10 trades we're just going to be wrong on, and it's going to happen. Then we usually look for some sort of overextension. So not just, right, the RSI reads 30, now you buy it, but the RSI reads 30 and the stock is tanking, then you buy it, right? So some sort of combination of indicator value plus like momentum or movement of the stock, and then those two things that we're looking to fade. So like Cisco, I bring up because I want to just keep an eye on it too. But yeah, Cisco, right? This is, you grab pretty much any indicator and it's going to show that this is, hey, a little bit overdone. So let's just do a band. Right, grab Bollinger Band. Right, so there it is. But we didn't just buy it here, right? So it's through the Bollinger Bands, but it's been through the Bollinger Bands all these days. Right, it's through the Bollinger Bands and it gapped down, then we bought it. Right, so it's that acceleration of oversoldness on top of everything. But yeah, so that's what we're looking for. So, and again, it's a combination of filters that I spend a metric crap ton of time going through and testing and refining. But again, there's no secret, right? That's one of the beauties, I think, and one of the most freeing things of systematic trading is I'm not trying to come to you guys and say, I figured it out. No one else did, but I figured it out. Right? I have a system that is better than anything that anyone has ever done. Holy smokes, this is absolutely amazing. I have this 80 million% win rate strategy. Because it doesn't exist, right? So I'd be lying. What I am coming to you guys and saying I figured out is multiple strategies, all that contain small edges, and more importantly, ones that all contain small edges that are uncorrelated to each other, so that sometimes it feels like our momentum strategy is killing it. Like we've had some like real like bangers. I always just go to BTU just because I can remember it, right? We bought BTU right here. We have some insane bangers with this momentum strategy. I haven't checked the numbers yet. This month, the momentum strategy has sucked. It's been horrible. But that's okay, because things like, right, our mean reversion strategy is doing okay. And then sometimes the day trading does amazingly and the swing trading sucks, and sometimes the investments do okay. And the right, so the point is as systematic traders, we can stack independent and correlated uncorrelated strategies on top of each other. And to me, that is as secret sauce as you can possibly get, because anyone who tells you that their strategy works all the time, I think you just have to run. Anyone who tells you they're right 90% of the time and holy smokes, I make a whole bunch of money, run, right? We're looking for, again, small edges stacked on top of each other frequently, and then, right, we go from there. So that's right, and you can see that on Stats Edge Trading inside of any of the right. So if you just look at these, right, our momentum strategy is right 48% of the time, and our MR strategy is right 60% of the time, and the pullback is right 54%, and then these are the net results. So each of these strategies are just kind of okay. Like pullback, it makes 12% year-over-year growth with a 14% max drawdown. Okay. But if you take all of these three together and you combine them, well, you're right 52% of the time. So you're still wrong half the time, but that's okay. but now you've got a 34% year over year growth with a 15% max theoretical drawdown. And you've gone from none of these have a Sharpe ratio over 2, but you combine them and then they have a Sharpe ratio of 2.27. And a Sharpe ratio is just like how smooth your returns are. So you're just, again, the closest thing that I can ever see to any sort of holy grail style trading is combining strategies to the best you can and in an uncorrelated way, where strategy A sucks right now, strategy B is killing it, and then at some point that flips. And to go back to the real test versus AmniBroker, that's a huge thing with AmniBroker. So that's why that's a huge thing with real test. So that's why with what I'm building with AmniBroker, I'm going to know it's uncorrelated, because we're not doing anything right now that is trading stocks in play, like large momentum stocks. We're not doing anything that's trading that right now. So that means that I can focus there, and I know that there is unexplored edge for us there. Same reason I'm looking at the crypto space, which is, for just an update, it's just the crypto is moving so slow right now that some of these trades are just not doing anything. So I need to pay more attention. Like I need to have some trades actually work. Like River. I don't know what the hell River USD is. Let's get rid of log charts. Dang. Is that right? I didn't take this one. Holy smokes. Did anyone take this one? That's not right, right? RIVRUSDT. Yeah, holy smokes. Oh, please tell me. Somebody in Discord, please tell me. Anyone? So I guess I can show this here. So we have this beta channel. And these are, right, I post the strategies that we're currently testing. And this was River at $4 or $5. Now it's at 20. I didn't take it because I'm still watching. So I should be taking it, just very small. So even if I put like $1,000 into that, that would have been worth $4,000 right now. God damn. But yes, so for Stats Edge Pro members, right, we have the beta channel you can go and look at. And anytime anything comes from, this was me, sorry, I might delete this. This was me testing stuff, but like we have our power earnings gap strategy that we're testing, right? And here's some of them. And then we have our crypto that we're testing. See, the other one was FILE USD, FIL USD. That was at 132. It hasn't really moved that much. 152. Man, I'm not hearing anyone say they got River. God darn. So, oh well. But yeah, so again, I don't know how I got in that rant. Oh, I was saying that's what I'm looking for. It's just more and more. I know the crypto is going to be uncorrelated to the equities. So I'm okay with that. And I know that the day trading stuff that I'm looking at currently is going to be uncorrelated to the day trading stuff that we do now. So what we're doing now is market maker style day trading. What I'm looking to get into is more like active, like momentum style, like penny stock or whatever kind of day trading. And I know those things are going to be uncorrelated, so I don't really feel the need to test them together immediately. What I'll do is I'll test them, and then I'll come up with some sort of Python script or something later that takes the real test output and the AmniBroker output and then tests them all as one strategy. And then I have that to kind of prove to myself. But I am like 97% confident that the things that I'm planning for AmniBroker are going to be uncorrelated with the things that we're doing now. So they're just going to be additive in nature. Would you stop a strategy when it's not doing well and focus on the strategy that's working, or continue both? Momentarily, not completely. No, absolutely not. I've tried doing that, and it didn't work. I see the merit of it, and I do think that that's kind of a place for potentially some technical analysis as well, right? So, there is a bunch of seasonality going on, and I'm going to make a video about it soon. That makes me think that this year until the midterms could be choppy, and there's some. No, I shouldn't do that on stream. Hold on. Let me bring up the chart. That's just not me just pulling stuff out my butt. There's a lot of seasonality, and I'll do a video about this soon. There's a lot of seasonality that points to that. Yeah, here it is. And if you saw me on Trader TV, I already talked about it. Right here. There we go. So this is the seasonality for the election period, right? So this is the election year. So that would be 2024. And the black line is the average. What does the market do on average, right? And then the red line this year is 2025. And that's usually a bullish year. And that's the post-election year. They go the honeymoon period. People call it whatever. Again, I'm Canadian. I'm not going to talk about your guys' idea. This guy here is the midterm year, and that's what we are right now. And generally speaking, going into the midterms, there's just some kind of choppy action. A little bit of an up movement till April, and then a little bit of a pullback to right before the election, and then we continue off to the races after that. So this year usually is a pause. Then if I take that and I combine that, and there's a point to this, I know, and I combine that with, what a great year that we've kind of had, right? So we've had a great year. There's a lot of last 2 years, there's a lot of things saying, okay, there's potentially some chop into midterms. You could take, I think, technical analysis like that, and then you could say things like, okay, if that's true, maybe I want to focus more on my mean reversion, my pullback setups, because they're more designed to take advantage of the ebbs and flow of the market. I don't think that's dumb. I don't think it's wrong necessarily. I just am not interested in doing it. Because you always got to think about what you're trading. You never know when your strategy is going to start working again. You just have no way to know, no way to figure that out. So what you're trading is if you're right, you're going to make more money than if you just followed all three systems independently. And what you're trading for is, obviously, if you're wrong, there's a potential where your system made a bunch of money and you lost money. If you're okay with that, go nuts. For me, not so much. So I could see myself maybe weighting one side versus the other a little bit differently. Maybe doing a larger weight on this side versus a larger weight on that side, something like that. But shutting it off entirely, no, I'm not thinking. I don't do that. For me, I just trade them all, and I just take the hits from the one that's not working and moan about it a bit and then move on. If you guys saw the video about the returns last year, right? It's the thing I wish I highlighted more in that video is how shitty the drawdown felt in April, and how everything was not doing well. And then later in the year, things did amazing. And that it was really the ability just to keep my head down, keep doing what I should do, that made up all the difference, right? Do I go all in or ladder into any of my strategies? No, just not. I haven't tested, and doing like laddering in and out just seems more complicated than it's worth. So it's just take the trade, put out the stop loss, take the exit when the exit happens. Right. You guys may have noticed by now that I have a decently zen attitude to all this. And that's something that having the data, I think, really helps with. Like, I know, for example, that I'm going to be wrong roughly half the time. I know it. It does not surprise me when I lose money on a trade. And if you're following and it does you, then you should go look at the data, because you're going to be wrong half the time. And there's something a little bit freeing, I think, about that it's just going to happen. But if I continue to do what I should do, then based off the back tested results, I should have those results, right? And hopefully better, because all the time, not better because I'm able to figure something out that the rest of the market doesn't, but better because I'm going to spend all day, every day here working on new strategies, better strategies, right? Updating the strategies that I have currently, like constantly pushing forward in that respect. And that only works if I'm able to sit here and do the same thing over and over and over and over and over, right? All over, like, just, I have to. And I have to know every time I push the button, it's 50-50 chance this one's a loser. And if that bothers me, do something else. Again, one of my favorite sayings, I say it tongue in cheek, but it's true, is like, if you want to make it money every day, go get a job. That's the only, right? Trading will not pay you every day, every month, sometimes every year. Some of my back tests have losing years in them, and it sucks, but it's just, if you want to sit down every day and make money, that's what a job is, right? You go and you clock in and they pay you, and then you leave, right? And what I do is, it's going to be more variable. Just kind of has to be. So how much infrastructure do I maintain for my analysis? I have 25 years of survivorship free end of day data. I have 10 years of 1 minute candle data. I have multiple systems to backtest them. I have multiple computers to run them off of. It's a lot, right? It's a lot, but it's what I need to do for my trading, and it's what I need to do for you guys for Stats Edge Pro. So it happens, right? Am I covered in them? Not too sure what you mean. You want to just elaborate there, but yeah, I have, a lot of infrastructure, a lot of stuff, but nothing that I don't need. Like right now, I have a laptop here and one computer monitor that runs in the headless one. So, yeah, if you're wondering, so Stats Edge Pro covers everything that I'm running currently. There may be systems that I run and I say this is a good system that I could use, but it's just not suitable to either share with a larger audience or would not work if I did. And that's a decision I'll make at that time. But right now, everything's just part of Stats Edge. If you're a Stats Edge Pro member, then you're seeing what I'm doing. And I other than the little bit of discretion I give me, which is really just holding on to winners. Like, speaking, I know I keep bringing up Cisco, but it's top of mind. Say there's some world where we actually caught a bottom within like 10 cents on this stock, I'm gonna hold some. All right, it's just I kind of have to, and that goes then into a discretionary trade. And other than that, I don't hold on to losers longer. That doesn't help me. I don't really do much else in the way of discretion. But there are some of these trades that I will hold, maybe sell half instead of all of it when I should. And because there is a world in which, we got in like right here and the thing bounces all week and maybe it goes up to, 76 or something like that. I think I'd be crazy not to sell half the position, put a stop loss on like a closing basis under here, and just own Cisco for a while. And just know if the AI thing's going to just keep ripping, then we've just caught like a massive AI player on a pretty decent dip. Like, I'm really bummed about Apple. Just the trade that we were supposed to have on Apple. Where is it? Right here. Right? I don't know. It could still happen, but right. I just wanted we needed a little bit lower, and then they finally announced. I was reading in the news, they finally announced that Siri's not going to be absolute dog shit for a little bit. Like, they're going to start using Gemini, and I'm like, oh great. So maybe that's like, we just need a little bit more, and that's kind of low as well. I had this problem thinking about a job, and I fixed it. I was thinking, you guys make money every day. Yeah, just not. Again, it's a tongue-in-cheek saying, but it's totally true. There's so many traders, and a lot of it is just the bullshit marketing that's about trading. Someone's like, yeah, you come in, I make $1,000 a day, and I close my computer and leave. It's like, no, you don't. Like, shut up, man. You don't. There are traders out there that will make, $20-30 million a year. Great traders. They don't make money every day. They don't make money every week, and they probably have like a down month every now and then. It's the truth, right? It's not the way it works. Thankfully, it doesn't have to be the way it works, right? But you just have to get over it, and you have to get over. So first of it, it's understanding that you're going to be wrong in a lot of your trades, and then it's understanding that those are going to happen in streaks. There's going to be periods of time where everything you touch turns to gold, and you feel amazing. And then there's going to be times where everything you touch turns absolute crap, and you're going to feel crappy. And it's understanding that neither of these things are true. You're neither amazing, nor are you dog shit, right? The question is, do you have a tested trading plan that you're going to be able to continue to stick with when you're doing amazing and when you're doing awfully? If you can, then you'll be fine in the long run. Oops. Do I take all of the trades that are sent? I try to take everything that triggers. There's some times that I miss it, right? I have an order out and it rips or something like that. But yeah, I try to take all of them that trigger. That's absolutely. Now up to, right, like we talked about, the first 5 of each strategy, and then running at a buying power after that. But right now, I don't mind going into a little bit of leverage because the market feels okay and everything. Maybe if it was 2008, I'd be a little bit worried about that. But yeah, I try to take them all. But silver's selling here. I still get tempted, and I still do take some discretionary trades from time to time. I really want to short silver here. I really do. I probably shouldn't, but I really do. There's got to be a short silver ETF that I could just punch into some here. And not thinking, oh, it's going down to $30 or something. Thinking, oh, maybe it'll go back to 73. I think I did a video about it. Maybe I'll do another one, but I still think it's important to take your shots, even as a systematic trader. Just take a shot every now and then. Keep yourself interested in the game, for lack of a better term. But all right, guys, I'm going to leave it open for another few minutes of questions, and if we don't get anything, I'll shut it down. I'm planning on doing this time slot for about an hour, like we did weekly, most weeks going forward, not all weeks. And then my wife's like shifts weird, so she's gonna in February change. So I'll probably move it to Thursday then and do that. But I just want to do it when she's home so that when, I was going to say if, but when the kids get sick, that I can still stream and they can be her problem. Because I think I was planning on doing this like the last like 4 Tuesdays. And I think every Tuesday, like alternating, one of them was sick. It was either a holiday or one of them was sick. And if anyone has kids, you know what I mean? Especially this time of year, it just gets bad. But all right, guys, I think that's good. Again, more frequent streams. That's like a New Year's resolution of mine. So if I forget, yell at me in the room. Because the plan is to keep going with these guys, and I'll talk to you guys soon.